Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Wednesday, December 1st, 2010. Happy December to everybody. And it looks like the markets are celebrating December as well, as we've got a major rebound going on here. But the question is how long is this going to last? Is this a reversal here of trend, or is this just a pullback for now? So we're going to have to take a look at what's happening here. But stocks in the U.S. are up. Dow Jones is up 200 points. S&P's up 14 and a quarter. Wow, right back to 1200. So they're up anywhere between 1.5% and 2% here. We've got commodities higher. Oil up to 85.75, and also gold up to 13.85. So today's an obvious risk-taking day. One of the reasons that we are seeing this risk-taking is because PMI figures that we're seeing from around the globe that came in better than expected. China's figures came in to 7-month highs, so it shows that their economy isn't slowing down as of just yet. Also in the UK, they had better than expected PMI figures as well. It rose at the fastest pace in nearly 16 years, so it shows that economies are expanding around the globe. Now, just showing you here the euro. Okay. The euro is sort of shaking off these debt crisis concerns that have been plaguing it. We're talking about Portugal and Spain, and it's kind of done a pullback here. It looks like support at 130 held, and now it's pulled back. The short-term trend is still down. We're looking at the 30-minute chart here, but you can see we're bumping up against the 38.2 retracement level here. So we'll see what happens there. But just know that these problems in the eurozone have not gone away. Now they had in Europe, Germany had better than expected retail sales figures, and PMI figures for the Eurozone came in a little bit less than expected, but that's okay. I just want to show you the Aussie here real quick. We can look at it on the, let's look at it on the 15-minute chart. They had their GDP figures came in last night, and it came in worse than expected. Just want to show you what happened here with that on the 15-minute chart. All right, you can see just looking right here real quick, GDP release came out, and immediately the Aussie sold off. All right, GDP grew at 0.2% versus a 0.4% expectation. All right, and then the year-over-year figure is down to 2.7% versus an expected 3.4%. But you can see that the market sort of shook that off down here and rose higher, and that was on the Chinese PMI news there, which affects Australia because China is the largest importer of Australian goods. So that's a good thing. And perhaps this is exactly what Australia's intended when the RBA has been raising rates there. So this may not be a bad thing, as people have thought. And as you can see, the Aussie is higher. Carry trades are going on as a result. So that's what's going on with the Aussie. I can show you just the Canadian dollar real quick. There's a big winner of the day. I'll just show you CAD versus Japan. All right, demand for commodity currencies has obviously increased with risk appetite, and the fact that Canada isn't really affected by what's going on over in the Pac Rim, namely what's happening with Korea. Okay, that still is a major problem over there that has not been resolved either. All right, so we still have all these risk themes going on around the globe, and no resolution yet. So while we have some good economic data today, all right, this one day does not a trend make, and we're going to have to keep an eye on this and still trade sort of cautiously. So you can see that the dollar's also higher versus yen. All right, that was that safe haven play that's been going on. Now, here in the U.S., we're going to get ISM manufacturing numbers a little bit later this morning. All right, and then we also had ADP employment change numbers that came in better than expected. Now, this is ahead of Friday's non-farm payrolls report, which is going to be the big news of the week. So, that's kind of what we're looking at. So, we've kind of got this schizophrenic market going on here, where longer-term investors are a little bit plagued or kind of confused by what's happening here. But for short-term investors and traders like myself, this is a great market, all right? Because one day the world is seemingly going to end, and the next day everything's champagne and roses. So, you can sort of see, how the sentiment can shift day by day. But that's how markets work, all right? So they sometimes have to have short-term amnesia, which can, sometimes confuse and distort the overall picture. But let's not forget, we still have this Korean conflict going on. All right, Europe still has the debt crisis going on, and quite frankly, Portugal and Spain are probably, just a few few hundred basis points away from bond vigilantes pushing yields to the point where one of those two was forced to take a bailout. So that situation's not finished over there. All right, so I'm not trying to play Debbie Downer here. All right, I'm content as a trader to sort of party on with the markets here, but I'm hanging real close to the exit because when the party's over, you want to be the first one out the door. All right, you don't want to be the last guy sitting around at the end of the night with no way to get home. So that's what I'm looking at today, folks. I'm keeping the trading short term. I'm content to let the market tell me where it's going to go, but I'm keeping an eye and an ear open for these overall risk themes, which have not been resolved yet. So I'd suggest you do the same with that, and good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.